Are you looking for an investment opportunity with legs to cover multiple decades? Take a look at this empowering tale of an Atmanirbhar, self-reliant India, embodied in the theme of the Indian energy sector. Here are 5 compelling reasons why. 1. India is the world's 3rd largest energy market, and it is expected to be the fastest growing energy market globally, led by the shift from combustion to electrification. X of coal and oil, India's primary consumption is expected to grow by 6.4%, with the share of renewables seen increasing to 68% from 22% at present. 2. As well, our natural advantage in green energy. Think acres and acres of solar and wind plants peaking at different times of the day. Plus, our large hydro resources. Together, they can result in India's transformation from energy deficiency to energy sufficiency. Solar and hydrogen value chains are the key to achieving global climate goals. Today, China holds 85% market share in the key elements of solar and 50% in hydrogen value chains. With the China Plus One strategy in place, India has tremendous scope here, given its competitiveness. This shift could also possibly insulate government policy from external oil price shocks. Value will also be enhanced through the redeployment of cash from the traditional energy businesses towards green energy. The government's Panchamrit commitment to reach net zero by 2070, to cut overall carbon intensity to less than 45% by 2030, to meet 50% of energy requirements from renewable sources by 2030, to reach 500 gigawatts of non-fossil capacity by 2030, and 5th, to cut carbon emissions by 1 billion tons from now until 2030. Provides a lot of headroom for growth in the new energy space. 4. Stable government policies and cheap and easy availability of renewable energy combined with past underinvestment in select segments of the value chain could boost the outlook for existing players. And finally, possible correction of the current underrepresentation in the broader market index. The weight of the energy sector, that is oil and gas, minus reliance and utilities, in the BSE 200 fell from nearly 25% in December 2004 to 6.75% in December 2023. Something that could change in the future owing to policy reforms and the focus on new energy. The Nifty Energy Index has also outperformed the Nifty 50 both on short and long-term basis. And despite this, the valuations for the energy index remain quite reasonable. As its name suggests, the all-new SBI Energy Opportunities Fund will look to tap into every opportunity in this space, from oil and gas to power and power ancillaries all the way to green energy. Here, an optimal mix of traditional and new energy and power utility companies will help in reducing the performance volatility while improving risk-adjusted returns. And let me clarify, SBI Energy Opportunities Fund is not a sectoral fund. It is a thematic fund which will not just cover the entire ecosystem, but also become the raw material that powers India's manufacturing push over the coming decades. For more information on this new fund offer, please contact your advisor or mutual fund distributor. Thank you very much for watching. Happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.